Well, hello and welcome to Bloomberg Quint. We are joined by the management of Kajaria Ceramics. Mr. Ashok Kajaria, who's the CMD at the company, joins us to take us through their Q1 numbers. Sir, first of all, thank you so much for taking the time out and speaking to us. Well, these are challenging times, not just for your company, but for the industry as a whole. If we take a look at your Q1 performance, your revenues have grown by about 6.5% on a year-on-year basis. And even in such challenging environment, the volume growth has been quite positive. It has seen a 10% growth. How are you looking at demand from as far as the current quarter is concerned and for the rest of the year going forward?
Current quarter, we are looking at about 12 to 13% growth. Markets are very tough. It's honest. Let's be honest about it. But we are looking at 12 to 13% volume growth for the current quarter, and for the second half, we are looking at 15% plus.
Right. So you do expect the second half to be a bit skewed in favor of the volumes being higher in that time around. But the on-ground situation, given the sort of, the subdued demand that we have seen in the real estate department, what is it that gives you this confidence of achieving, this 15% volume growth even in the second half, sir?
It is not only real estate. You see, if you see Kajaria's background for the last 4-5 years, our biggest strength is the retail dealer network. Today, Kajaria has almost 1,500 dealers, and the biggest strength has been the retail market of the dealers. Today, in case of Kajaria, it is almost 70% which goes to the retail segment, and 30% goes to institutions. When you say institutional sale, it is of 4 kinds. It is normally, first is a builder who's making 1 or 2 projects. He has no problem at all. He had no problem earlier, he has no problem today. Secondly, a lot of business has come from the government in the last 2 years, I would say, in the field of education and medical. A lot of work is coming out of the states in these 2 areas where a lot of hospitals and institutions are being built. So that has speeded up in the last 2 years. The basic problem lies in the other real estate housing segment where demand has slowed down. No doubt about it, and some of the builders are in big trouble because of RERA and various other things. So looking at that, in spite of all the difficulties, we are confident enough of achieving these numbers.
Okay. So coming on to your, expenses side, while you expect, the volumes to be somehow supported when it comes to the government measures and, government spending, the raw material situation, that too has improved. In fact, in the first quarter, we've seen that your raw material cost has, come down. But most importantly, it is your power and fuel cost. There has been a notification change which came out earlier this year, making it mandatory to use the natural gas, and the prices too have, come off. As a result of which, the margins have come in at 15.2%. How do you see the margins panning out from here on, sir? Because it has been consistently stable around this mark for several few quarters now. Do you see an improvement in margins going forward?
Raw material prices have not changed much except for some freight element. So raw material, basically there is no price movement. As far as the gas is concerned, it is becoming mandatory. Like our Rajasthan plant and the UP plant, we have already converted both to gas from 1st of June. But basically, as you are aware, the gas prices have come down, slightly come down, and we have 3 kinds of gas. We have RLNG gas, which is the expensive gas. Then we get some Henry Hub, which is at a better price. And then we also get some spot price. All these gases are coming from GAIL, which is our main source of raw material. And the average out is almost same as utilizing combination of gas and coal. So gas prices this year, we don't see much change on the positive side. Definitely it will be at par with whatever we have spent last year. And as far as realizations are concerned, first quarter has been slightly less. Let me take you through all the 3 divisions. Ceramic tiles, the overall realization has come down slightly, as you say. In ceramic tiles, we have already increased the prices of outsourced materials from 1st of April. In the manufacturing sector of ceramics, we have increased the prices from 1st of July. So going forward, we see that realization of compared to what we did last year should be slightly better by about 3 to 4%. As far as the polished vitrified is concerned, there is some discount because we did some exports to make to do some government because of government regulations. That will be over by end of August. And going forward, we don't see any negative impact as far as the polished vitrified is concerned. On the glazed vitrified segment, our realization last year was roughly about 467 rupees a square meter, which has come down to in first quarter to about 435. There definitely there is a price pressure, and we don't see that much going up from 435 more in the next 3 quarters. That will remain more or less at the same level. That is what we are looking at.
Right.
So definitely, if you see all the three combined, you will see the price realization will be better than first quarter.
Okay, so there are some conflicting reports from different brokerages. While some say that the reduction in the gas prices and the move from coal to gas is beneficial for the organized players, because of this reduced prices, the margins are likely to improve. At the same time, there are reports which cite the fact that because of these lower gas prices, the unorganized players who operate at a wafer thin margin, they would be able to safeguard those prices and not indulge into a price war. What do you make of it, and what is your sense in this whole situation?
See, as far as the unorganized sector is concerned in Morbi, they are now more or less coming to gas because they were using coal. A lot of things were happening. With the NGT order which came and sometime in March, they are basically now more or less converted everybody to gas. Some plants have not been able to operate also. Almost according to our information, about 125 plants are completely shut, because they don't have neither resources nor the money power to work on whether gas, everything in number one. But rest of the people have more or less have converted to gas, and if they convert to gas, their cost will definitely go up. Although gas prices of GSPC has come down slightly on 1st of July, but more or less their cost of overall will not come down, because they will be switching over from coal to gas, which changes a lot of things. Because in coal there was a lot of things happening which will not be possible in gas.
Okay.
So I don't think it will make much material difference as far as their costs are concerned.
Okay. So a word on the pricing, like you mentioned about how the realizations across the different product categories has come down, and given the benefit that now most of these unorganized players also have from shifting to gas from coal and the lower gas prices, is there any chances of prices reviving from the current levels? Because there are several reports which also highlight the fact that most of the organized players have been in this battle with the unorganized players as far as pricing is concerned, and that is likely to keep the margins in check despite the benefit of lower power and fuel costs. So do you see the pricing environment improving from here on?
See, ceramic already we have increased, as I just shared with you. Polished vitrified, I feel that next 2 months it will go up by at least 20 rupees a square meter, because their costs have gone up because of various reasons. One is gas. Secondly, the feldspar coming from Rajasthan, there is a ban which has also made their cost more. And as far as glazed vitrified, I just said that prices, whatever we have realized in the first quarter, more or less will be maintained, because there is a lot of pressure on the GVT section. So I don't think it will come down further, but it will definitely be maintained at these levels.
Okay, so on a blended basis, if not for an improvement in the realizations, you expect it to remain steady going forward? No,
I expect some improvement. Whatever you have seen in the first quarter, there will be definitely a positive improvement going forward in the next 9 months.
Okay. So earlier in the
glazed vitrified, the other two will have a positive growth.
Okay. So you did earlier mention about the fact that 120 odd plants in Morbi have shut down operation because of various issues, be it the shift from coal to gas or even because of the working capital requirements. Has this whole play of gaining market share from the unorganized sector, has it played out completely? Do you see further scope, and how do you see this space going ahead over the next 2 to 3 years?
If Kajaria has to grow every year at 15% volume terms, like this year we are talking about anywhere between 13% to 13 to 14%. 10, I just said 12 to 13, and second half 15. And going forward, we are definitely looking at 15% volume growth. So that means definitely we at Kajaria will be taking some market share from the unorganized players.
And is it happening?
Industry is not growing.
So that's the point that I wanted to. That's exactly what I wanted to ask you. That despite the industry not growing, how is it that you are planning to expand your market share at the same time? Will it be at the cost of these unorganized players, or would it also be via the aggressive dealer network expansion that you were also referring to?
See, both things have to work together to get their market share. As far as dealer expansion is concerned, it is happening in two ways. Some of the dealers who had made showrooms earlier, they are getting the benefit because of GST. It's not a question of only increasing the number of dealers, they are also opening more showrooms. Somebody who had 2 showrooms earlier, he has opened 2 more showrooms in the last 1 year, and they're opening more and more showrooms because they are now reaping the advantage of GST. As far as the gaining the market share, it's a natural thing which will happen, because otherwise how do you get market share? If we have to grow at that level and the industry doesn't grow to that level or doesn't grow at all, that means Kajaria is taking some market share out of them.
Right. So lastly, if you could give us a word on what is the capex for FY20? Are you expanding into further capacities, or expanding into your product mix? capex for FY20, we are only doing the south plant, of which the total cost was 140 crores. Last year we already incurred roughly about 70 crores, and this year we should be doing about 70 crores. We are doing a small capex in sanitary ware at about 22 crores and some normal capex. So overall capex for the year will not be more than 120 crores. Okay, and any timelines that you could share with respect to the plant that would be coming up? By when do you see it getting commissioned?
The tile plant in south will be commissioned in September 2019.
Okay.
The sanitary ware plant is expected to be commissioned end of next month. So both are about to be commissioned in the next 2 months.
And what is the overall capacity of this plant, and what sort of revenues and capacity utilization that you will be targeting for FY20 from the new plant, and more specifically the tile plant in south?
And tile plant, the capacity is 5 million square meters per annum, and since it will be only there for 6 months, so that means 2.5 million. We should definitely operate about 80-85%. So it should produce about 2 million. Around 2 million square meters for this financial year. Sanitary ware plant will be commissioned end of August. That plant is already operating at full capacity, and we hope to operate it at full capacity, the expanded capacity also, for the rest of the year.
Okay, sir. Thank you so much for taking the time out and speaking to us, and all the very best for the coming quarters. Hope to speak with you in the second quarter as well.
We have to continue this discussion. Thanks a lot. Thank you.